Hello students, welcome to the third part of fourth module. In this video we are going to study about verification and valuation of assets. Verification of assets means the proof of existence or confirmation of assets on the date of balance sheet. Verification usually indicates verification of assets of any organization, which can be done by the examination of value, ownership, existence and possession of any asset. As per your syllabus, you have to study land and buildings, plant and machinery, goodwill, investments and stock in trade in this particular video. So let us study about valuation and verification of land and buildings. Almost all the business or commercial undertakings have their own land and buildings, but some of the companies runs on leasehold premises. So for that purpose of verification and valuation of land and buildings, we have classified land and buildings into two things, that is freehold property or land and buildings, secondly leasehold property or land and buildings. So how we are going to verify and value the land and buildings on these cases? So while coming to the points, we have first one, title deed or lease deed. In case of land and buildings, the auditor should verify the title deed or a lease deed agreement to examine ownership as well as purchase price of that particular land and buildings. Secondly, confirmation. The auditor can also verify it by consulting a lawyer. The auditor can determine the title of ownership because it can be sold by the power of attorney or any other way. So the auditor has to determine the true ownership of assets. Point, purchases. The management can purchase the land and buildings for the expansion of business activities. The auditor has to verify the agreement and payment vouchers for this purpose. Fourthly, sale of buildings. In the same way, the management can also sell the land or buildings of that company. The auditor should examine the sales deed, the amount received and the date of sale. In the same line, he has to check the entries of such transactions in the books of accounts, profit or loss. The sale of land and buildings will result in gain or loss to the company. The auditor has to check that these details are correctly recorded or not. Next point, construction cost. Sometimes the management can construct any additional building. The cost of material, labor and overhead are added in the value of buildings. In this case, the auditor has to examine the vouchers thoroughly so that the actual amount can be determined easily. Next point, lease building. This is for leasehold premises. Sometimes the management can get a building from the owners at least for a specific time period. The agreement of lease is made and the amount is also settled. In that time, the auditor has to check the period of lease as well as the amount of lease. Next point, depreciation. The auditor has to verify that the amount of depreciation is charged according to the provision of relevant act. Expenses of improvement. When the management is made any expenses which is related to the improvement of any land and buildings, it is added into the cost of such asset. In this case, the auditor has to verify such type of expenses are really capital in nature. If the property is mortgaged, then he should also take the certificate from the mortgagee to the because sometimes when the management is in need of loan for the survival of business, he can arrange loans against to land and buildings. In this case, the mortgage deed is signed by the borrower with the lender. While verifying, the auditor can ask for the mortgage certificate from the banker too. So to verify the value of land, cost price should be considered, and to know the original cost of the property, he should verify the transfer deed. In case of building valuation, builder's receipt and depreciation must be considered. Second fixed asset is plant and machinery, the same aspects like land and buildings. This item is also verified by the references to the original invoice, correspondence with the books of accounts. The auditor should see that the plant and machinery is properly depreciated and all relevant details are recorded with documentary evidence from time to time. Verification and valuation procedure is as follows. The first one is physical existence. For the verification of the plant and machinery, it is necessary that the auditor should verify the physical existence of the asset and confirm with the quantity and quality of the machinery which is installed in the factory. Secondly, purchases. The auditor can also check the vouchers to know the purchase of plant and machinery. It is helpful to check the nature of machinery, date of purchases, its amount, and also its entries in the books of account. Then ownership. The auditor has to check the ownership of the machinery by checking the vouchers or invoices with related documents. Then buying authority. In this particular point, the management has the right to buy the machinery for the business purpose by the approval of general manager or the owner of the business. Hence, the auditor should check the purchase policy and other relevant details to ensure that these assets are acquired accordingly. Additional purchases. The management can also purchase the additional plant and machinery, but it must be recorded in the books of accounts and in the register of plant and machinery. The auditor is going to check the vouchers, date of purchase, and also the amount of plant and machinery in books of accounts. Opposite to purchase, sales of machinery. The management can sell the plant and machinery under certain situation. In this case, the auditor has to check the register of plant and machinery, vouchers of sale of plant, their amount, and also the date. After sales, you will be having profit or loss. When the management sells the plant and machinery, there may be some profit or loss. The auditor has to check that this is written in the books of accounts accurately through vouchers or not. Next point, checking of balance. The auditor has to check the opening and closing balances of plant and machinery account with the help of previous year and current year's books of accounts after sale, purchase, as well as sale on plant and machinery. If you earned any profit or loss, everything has to be checked in the particular books of account of plant and machinery. The next point is depreciation. The auditor has to check that the rate and method of depreciation is done according to the legal provisions from every year, from year to year. Then the last point is manufacture. Sometimes the management may manufacture the machinery in its premises. The cost of material, labor, and overhead will be added to the machinery account. The auditor has to check the voucher which determines the cost of machineries which are manufactured within the premises. The next item here to value is investment. Investments includes government securities, shares, debentures, etc. So first point is inquiry into the value. When the number of investments is very large or high, the auditor should ask for a schedule of investments made by the client. Schedule of investments here when the company has invested in a particular government securities or shares. So okay, that particular schedule has to be given to auditor to verify. Secondly, the existence. Auditor has to take a personal inspection to verify the investment whether it is existing or not. Auditor should verify the investment which is shown in the balance sheet really existing on the date of balance sheet. Then ownership. Auditor has to ensure that the investments are registered in the name of the client, and also the relevant vouchers, books of accounts, certificate has to be verified with the value which is shown in balance sheet. Then vouching. Auditor has to verify the transaction through vouching process. If the securities are transacted through banker, auditor has to obtain certificate from banker. If they are transacted through a broker, he should examine the certificate received from the broker. If the company has any trustees who works on behalf of the company, then the auditor has to verify trust deed. That is next point. If the investments are held by any trustees on behalf of the company, then he has to examine that particular trust deed. Finally, valuation process. Generally, investments are valued at cost price or market price, whichever is lower. Based on the market condition, we have two possible outcomes based on the falling of price. If the fall of price of shares is temporary, we have to ignore that and we have to take the market price. If the fall of price of share is permanent, then we have to provide some depreciation to investment, then the remaining amount, the left out amount after depreciation provided, then we have to take that particular amount as the investment balance. And lastly, disclosure. Auditor should also confirm that the investments are properly classified and disclosed in the financial statement in accordance with the accounting principles and standards. Next item is stock in trade. Stock is one of the current asset which has major possibilities of errors and frauds. An auditor must check proper internal control system is exercised over receipts, payments and maintenance of stock in the company, because the correctness of the profit and loss account of a concern depends to a great extent upon the correctness of the value of the stock of the goods in hand at the closing time or at the month of March. The auditor has to verify the existence of the stock in hand, but he has also to see that it is valued according to the certain principles of accountancy. The auditor should insist that upon the maintenance of stock book, if it is not already been maintained, we have to check the duties of auditor regarding stock in hand athwa stock in trade to verify. For that purpose, he has to check stock inward and stock outward book through vouching process. He should satisfy himself that the cost figures have been calculated on the some methods. If any method is followed in any year, the same costing method has to be followed in the company. If any costing method has been changed from one year to another year, then he has the right to ask the company for a reason with possibilities of changes in report. What are the types of costing methods can be? They can intervene in their particular business organization. You are learning in CM. Okay, actual cost or unit cost method, average cost method, FIFO or LIFO, base stock method or standard cost method, or any kind of method they can use, but they have to use the same kind of method in every year. If they are changing, means then why they are changing, what are the purpose of changing, and what were the outcomes of that particular change of costing method from one year to another year has to be studied by the auditor. Then the physical verification of stock. The physical verification of stock has to be performed by auditor, because it will enable the auditor to evaluate the efficiency, adequacy of physical verification and valuation of stock. Then the auditor has to check all the books of accounts which affects the stock, such as purchase return, sales return, cash and other subsidiary vouchers. The auditor should find out whether any stock is lying with the third party, like consignees or with mechanics for some repairs, machinery. Like that, he has to find out whether any current assets which is in lying with a third party or not. That has to be checked. Then the auditor has to check work in progress, closing stock properly, because the remaining closing stock as well as the work in progress must be added to closing stock of the company, because when you are valuing the stock in trade, each and everything has to be ensured by the auditor. And also the ownership, he has to prove that the ownership of that particular work in progress stock as well as closing stock should be borne by that company only. And auditor has to check goods inward register where closing day transaction andre March 31st transactions are also included in the books of account. And he has to ensure goods not related to business have not been recorded in the stock ledger. The last item is goodwill. Goodwill is defined as the monetary value attached to the reputation of a business, or as the differences between the purchase price and the net assets which are purchased and the excess amount so paid. It is invisible and it is a intangible asset. Its value depends upon the earning capacity of the business and fluctuates based on the profitability of the company. Its value will increase with the rise in profits and will decrease with the fall in profits. But here auditor has to check whether goodwill is appreciated or not, because goodwill never appreciated. Goodwill is valued at the present value and earning capacity of the business, so it will be valued based on the profits, not on the cost. So the valuation of goodwill will be cost less written off amount. Auditor should see that the goodwill is valued and shown in the balance sheet, because it has to be written off out the current profit of the business. However, auditor cannot question depreciation of goodwill, because it is not because it is binded with the company norms. As an auditor, he can give the suggestions or advice, but he cannot interfere with the decisions of the management.